here we go. We have the weekly chart on the VIX fear indicator, and we're showing you that when markets had sold off, that we had made our peaks. But the most important thing is each time the fear has landed, shot right up into here on a weekly level, they have come down. We remain above the 30 line, which is very important. If this comes down, you'll have a big holiday, happy Thanksgiving Day to everyone, because equities will rally if we start to pull back. And as the fear indicator works itself out, it would show that the bull would be in control of the market. If this fear indicator consolidates here and does not break below 30 and get back below its fear indicator weekly moving average, which is at 27.57, that's the weekly moving average. So for a Christmas rally to happen and or a Thanksgiving rally, Turkey Day, to happen, this weekly chart, which is it's good for the bull that it's not getting above this trend line, because there would be more fear. So when fear goes up, it comes down because of Europe and everything else. Super committee is coming out this week. It's a light volume trading week. This index is extremely important. From the daily chart here on the VIX, unlike the weekly one, it takes 5 days. 1, 2, 3, 4, 5. That equals this last week. The thing that on a daily chart is we must get below, once again, this major support level. This fear must come down. It can't bounce on 30 like it did here. This was during all of the stuff that was happening around the world. A close below 30, and as we run down here and get back to where these lows were, that's exactly when they gapped that fear. Boy, it came right back in off of Greece and Italy and France and everything else around the world, and the super committee. So if they're going to come to a conclusion, if we break above 35 here on the daily chart, it's a daily chart. This is a weekly chart of the VIX volatility fear indicator is what it is. So we've got to break below 30. We've got to run back down here and test that low. Then that means that this weekly would work back down as well. So when you look at the daily here, outside of that weekly that I just showed you, this is the trend line that it must go below support. That would be less fear, and equities would go higher. This is the update on the VIX, which equals the S&P 500. You can buy protection using call and put strategies on the VIX as well. That's a different lesson for a different day. Right now, we shot up, and we're below that trend line, and this, we got to keep falling down in value, and markets will rise. The equity markets will go up in value. Another thing that you're going to want to keep tied to that is a daily chart that we will throw in there. This euro right here is going to be a very, very, very important thing, and that's going to be this chart, FXE. If this FXE can get above and come back up and challenge and go higher, well, then there's going to be less fear and contagion in the market. And it's all going to be based on, once again, it's all going to be based on FXE. FXE, currency, euro, along with the fear indicator. So we're very clear that this cannot break below 34. If this breaks below 34, then your daily fear indicator is going to come way up here. And that means there would be a massive sell-off that would be in play for the holiday instead of a rally. So this must come back up and consolidate above this trend line and go higher and challenge where this was. With this breaking higher, equities go higher and fear levels come down. So it's important now that you take the fear and the euro and everything going on with the super committee in the U.S. All eyes are going to be on that this Wednesday coming. And basically what you want to see here is this to break higher and this to break down. Equity on the bull side for equities would continue to go up higher in value. That means that the equities that are the most oversold right now in their pullback will be the first ones to go higher. Watch the FXE and the VIX.